Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, watch out for the Biden Billionaire Tax Bonanza, especially with the new budget that he rolled out just in the last recent week or so of $5.8 trillion, the highest tax hike in history. They're going to need anywhere from 2.5 to 3 trillion plus of generated new taxes in order to pay for it. And of course, they're claiming they're going to start with the billionaires. William Baldwin in Forbes had a good article out this week I talk about on Hidden Wealth Radio, and he said, billionaires are the first tax targets of the tax hikes, and then we're next. And let me give you a couple of the big things that are on the docket. Number one is changing the rules around Roth conversions. Two, we just saw a major change announcement that looks like it'll go into effect just this past February on if you inherit an IRA, let's say from a parent, and the parent had not yet hit that required minimum distribution age, which presently is age 72. So let's say they died before they were 72. The inheritor now has a full 10 years before they have to take any money out, but they have to have it liquidated in 10 years at the latest. But the new revision, which looks like it might go into effect, is that if the person that passed was already of required minimum distribution age or older, then the inheritor has to take a annual distribution and then by the 10th year have it fully liquidated. So you can't escape the inherited RMDs. Why? Because with this budget proposal, the government needs more and more money from a tax angle to fill their coffers. Well, the other is changing the rules around the Roth conversion and changing the rules around the step up in basis. Now, some of you may be saying, Chuck, what does all that mean? I'm going to teach this Tuesday at retirementprotected.com. That's retirementprotected.com. The real threat to retirement, if you're a high income earner and you're trying to get to retirement, or if you've been a strong saver in IRAs and 401ks, 457s, 403bs, and you're already a retiree, you are Biden's big time tax target, especially for the highest tax hike in history with this budget proposal of $5.8 trillion, folks. Somebody's got to pay for it. Well, I talked about last week that going back to 1995, if you counted up all the IRAs, Roth IRAs, 401ks, they came to about $3 trillion. If you look at what that number was through the end of 2020, it's now north of $22 trillion. So this is the tax target. And I want to teach you what you can do to protect yourself. Imagine more financial success by avoiding unnecessary taxation. Those of you that own real estate or a business, but in particular real estate, because I've talked to a number of you, they're looking to change the depreciation rules. It's what they call depreciation recapture under Section 1250. And what this rule is the highest tax rate today on that is 28.8%. That's a recapturing of the depreciation you took on the property. And if that's over your head, that's okay. It just means if you rent property out and whether you took the depreciation or didn't, the government's going to make you recapture that. And the example I give is $36,000 a year of depreciation on $1 million apartment building. 10 years times 36 is $360,000. Well, Biden, instead of having a top tax rate at 28.8% of recapture depreciation, he wants that to go to the highest federal income tax rates. Just like the capital gain tax rate would be maxed out, let's say at 23.8%, because that includes the Obamacare tax of that ridiculous 3.8 net investment income tax, they call it. Well, when you go from 23.8 and even 28.8 all the way up to 39.6, because he's also pushing up the highest tax bracket for those that have incomes over 450,000 or have gains over $1 million, folks, it's taxed to the max. And I want to teach you what you can do to protect yourself. Go to retirementprotected.com. That's retirementprotected.com. I'll teach strategies that very few are familiar with that can allow up to a 100% tax deduction, sometimes even in the same year, to use that deduction to offset your capital gains or to offset your reported income because of doing Roth conversions, especially before the tax rates go up, right? 22 is going to go to 25 bracket as soon as the sunsetting of the Tax Cut and Jobs Act takes place, which is targeted at the end of 2025. The rumor is it could happen anytime. And so we got 4 years to jump on our guns here and learn what we can do to save taxes, especially as early as we can in 2022. Folks, you work hard for your money. Let's get to work. retirementprotected.com. retirementprotected.com.